Welcome to The Good, the Bad and the Ugly, especially curated from the world of economy and business today. Let's start with the good. The new Finance Minister Piyush Goyal has reiterated the government's commitment to strengthen the public sector banking system under the prompt corrective action mechanism. Almost 11 banks are under the PCA mechanism right now, and 3 to 4 more are under watch and may have to be brought under PCA if their performance does not improve. Goyal has, however, said that the banks will require 2 years of profits to exit the PCA mechanism when they have to. Though this means that the taxpayer will have to bear the burden of these banks until they become profitable, this would amount to throwing good money after bad. However, if in the process they do become more efficient, it would be good for the banking system, for their employees, as well as for the government, their owner. And now to the bad. Crude has already breached yet another psychological barrier of $80 a barrel. This has increased India's import bill to $109 billion in 2017-18, almost 25% higher than the previous year. In good years, India used to import oil worth $70 to $80 billion, and that would be set off against exports of petrol and diesel, which was around $35 billion. However, with the crude price crossing $80 a barrel, India's import bill could rise to as much as $140 billion if the crude continues its upward run. This will widen the gap between the expenses on India's crude imports and earnings from India's fuel imports to over $100 billion per annum. That's almost 6.7 lakh crore in this year. Some analysts are already predicting that India will have to raise the price of petrol and diesel by as much as 4 rupees a litre to account for the 90-day holiday in price increase that was in the run-up to the Karnataka elections. That's going to be truly bad for the Indian economy because it will increase the current account deficit, it will increase the fiscal deficit, it will slow down growth and will rise to higher inflation within the economy. And now the ugly. Harvard economist Carmen Reinhart has shocked the economic world by saying that the world economy today is in worse shape than it was in the 2008 financial collapse. She has supported her argument with the following observations. First of all, she says that in 2008, emerging economies had a current account surplus. Today, they are in current account deficit. Current account surpluses are the first line of defense for any emerging economy. Her second observation is that even though the world economy today is growing at the fastest rate since 2011, it's still not growing quite as fast as the world economy was growing in 2008. Her third major observation is that the emerging market indebtedness is among the highest it has ever been, especially for countries such as Argentina as well as Indonesia. This scary prospect of a possible collapse of the world economy is what makes this ugly. If you enjoyed watching this content, please subscribe to the Business Today YouTube channel and also like us on Facebook. Our Facebook page, www.facebook.com/businesstoday. Follow Business Today on Twitter India at BT_India and subscribe to our YouTube channel Business Today India.